Hey everyone, welcome to the weekly review. This week we had the FOMC meeting and the Fed cut 50 basis points. In my opinion, this changes the whole setup for the rest of the year, meaning how the market behaved so far was good news was somewhat good news, bad news was good news. Because bad news equal things are bad, it means the Fed will cut. Now that the Fed has cut, there is no longer an excuse for an expectation that there's a certainty that they will cut further. There is no need to support cutting by bad data. And when good news came in, it was kind of a scare that maybe the Fed won't cut as much as we want, which has gone away as well because they cut by 50 basis points. And we got small pullbacks, but generally speaking, it was still bullish. Like nothing really bad happened when we got good news. Now that Fed cut is a certainty, things should change moving forward. In that good news is good news because nothing broke and things are still going the Fed's way. And bad news is bad news because oh my God, maybe the Fed is actually late. And if you watch the press conference on Wednesday, uh, Jay Powell said the economy is strong like a million times. He was trying to overemphasize that. Reporters was always asking, why did you cut by 50 basis points if there's no problem? And at the end of the day, the conclusion was that we want to get ahead of the curve, and it's our commitment to not fall behind, basically, not that get ahead, but 50 basis points is our commitment to not fall behind the curve, which is perfectly fine. But any type of bad economic data now will kind of scare the market. It will be like good data is oh my god the Fed is doing it, soft landing, yay, let's rally like there's no tomorrow. And bad data will be oh my god the Fed was actually late, fuck, and market drops. And I think for moving forward, we actually need bad economic data for the market to drop. Now, it won't drop without, or let's say, not necessarily lack of bad data, meaning it's not bad, it's just okay. It's bullish. Good data is bullish. Bad data is oh fuck. And looking at the economic calendar for next week, basically there is nothing that can make us drop, in my opinion. Maybe GDP growth rate if it gets revised down, but this forecast is 3%. The revision has to be something like below 2. Like a 2.8 means nothing. This is not bad data, this is just uh, lack of great data. PC will come in line. I don't know. Nothing really stands out here until the following week when we get again jobs data with JOLTS, and I think there's something at the end of the week as well. Probably unemployment or something like that, NFP and unemployment at the beginning of October. But next week, nothing really scary from the economic side. On Friday, we had FedEx with earnings, and they got a minus 15%. Chart looks really bad unless it recovers directly from here early next week. We broke uptrend. It looks bad. And this is the kind of thing that can also drag us down, like bad earnings, which is a surrogate for economic activity, will bring us down in the next earnings season, or bad economic data, especially employment data, will bring us down once we get the relevant data points coming in. So this being said, like I said, next week I don't think there's anything scary that is dropping, and I think the market will continue going up, or at least going sideways in this range here. From a technical perspective, we have breakout on Qs, we have both on RSI and price, we have recapturing of the quarter green red pivot, and for now it tried to go below it, but went back up, and it shows acceptance of the new price level, which is bullish. For SPY, somewhat similar with new all-time highs. It tried to go back below, but it bounced for now, which is also bullish. Um, Bitcoin this was a rejection at the 200 MA and let's say horizontal level here, but again, it's not getting rejected, insta rejected from the 200 MA. It's basically hugging it. I'm not gonna turn it on because it doesn't matter that much, but basically if it does this, it's more of a bull flag and eventually it will try to go above. Maybe when it goes above, it gets rejected afterwards and does something like this, but again, we go up first before we go down. VIX is struggling to stay up. Uh, Based on the OI profile and everything, the positioning, I think 50 is going to be the target, but more like a push up below 15, not 50, 15. And then maybe we go up again. We shall see. But for now, everything is pointing toward at least sideways. And the base case is that, of course, this looks, we didn't I had a couple of scenarios. One which was going to tag this. It did, but I thought we would recover intraday. We didn't recover intraday, but this still looks constructive, more like something like this. We may do another push down, but this should be something like this. Let's say we poke below 565, but then we should go up afterwards. Because, like I said, nothing is scary. FedEx should recover a bit. I don't think it's ready to break down uh, quite yet. And even in the 221 cycle, let's look at it. FedEx like topped out in July or something. No, May. And then it went down a lot until September, recovered a bit until January, and this was basically FedEx in January. Like it was already in major correction territory when the market turned as well. So it topped out before the market a couple of months before, like half a year before, and it could be something similar here as well. Not necessarily that it takes us 6 months for the market to go down, but the market can go up in spite of FedEx. Maybe something like this. Then this would be when the market turns, let's say January. Yeah, it would line up pretty well. And this horizontal level here, this kind of behaves similarly. Like it poked below it, but it recovered, and then when it became resistance, we had the next leg down. Anyway, going back to our stuff. From a positioning perspective, a market perspective, uh, I think we still have to go higher. Nothing really out of the ordinary here. We had a huge expiration on Friday, uh, which this is what the rest of the month looks for SPY. Some volume came in for 580. This wasn't here before. This came on Thursday, and it was visible on Friday. This wasn't here before, so we can push even higher. 80% level is basically 570 pivot, and what we need to look out for here. Let's also look at the full October situation until October OPEX. Same kind of look here. Support would be 555, and the bearish pivot or the bearish bounce point would be 530. So not a lot of room to go down. 555 is not that low, even if we go down, and 530 would be a support. And the full thing, like I'll put like 229 to get the full graph. And once again, 570. Can't really go much higher than this. Support would be 540, and the low point would be 500, if we even get that. And I don't think we get it quite yet. I'll need to see what happens next. So, looking at this, what we want to see, this will change obviously. we want to see OI for the bullish case. We want to see lots of OI coming in for above 570, like lots of 590, 580, even 600, and we also want to see lots of puts coming in here to allow the market to go up on put decay. Uh, this week we we got lots of put activity, like a lot of put OI increases. These are obviously hedges because 430, 480 are way too out of the money to be relevant for the market. 380, stuff like this. But the whole market, we saw lots of puts being added. I'll show it. Increases, this wasn't that much, but this generally OI increases for on the put side. Um, and this is again supportive. We want more of this, and as long as price doesn't drop, this is potentially bullish. I'm not going to call it yet. Just saying that the potential for us to do another leg up and go to that 600 plus levels is there. Uh, and the only real requirement for that to happen, because we will do so mechanically, uh, unless some bad news comes in. If bad news comes in, I think we can go down a lot. If bad news doesn't come in, I think we will more likely go up. And going to VIX here, positioning, as you can see, is very 15 to 20 heavy. Most of the OI is between 15 and 20. That makes 15 support. And I don't think we can go significantly below it unless positioning changes, and we should get a bunch of puts to like 12, 15, to 12, 10, something like this. So we want to see a large OI increase in puts for VIX. We want to see a large OI increase in calls for SPY all of this year. We want to see the same for Qs all of this year. Like we want a ramp into 500. And this is what we have to keep an eye out for on all of next week. If we get this, the bullish case becomes real. And like I said, we have on Twitter, we have a cup and handle set up here. Not this one, further back. This is the cup and handle. And the target, if we get this breakout after consolidation here, is 617 area. We basically double this. 615, 617. Something like this. So in this area here, around 615, and this is by year end. It would happen. Most likely on a couple of surges. Let's say we go to 600 directly, do another correction. It won't be straight up. Then do another like that, and this would be the top area for good. But still, this is uncertain. There is a chance we go down. There is a chance we go up. It will depend a lot on what happens next week. If the market is bullish, meaning market participants are bullish, and they increase their long positioning, more likely we will go up. If market participants do not do that and we get any kind of small bad news, then the market can really go down and at least retest this, potentially much lower. But for now, 540 is the level of support here, as I showed here. SPX. Second. SPX has completely different positioning, like 510 would be 15%, 50%. Oh, and on Friday we were supposed to have a battle for 570. We didn't, but that's because we had a battle for 5700 on SPX, and we basically just stayed around that level the entire day here. And SPY is always like $1 or $2 below the equivalent 5-7x level on SPX. And for now, like if we look at SPX on the monthly expiration, 575 looks like the the top, the maximum possible. We are hovering around 80, 575, and this would make it SPY, I don't know, 573-ish. Basically a retest of this top area, maybe do a marginally higher high, and then should get rejected and go back into 577x on SPY. But again, no, on SPX. But again, this can change depending on how the OI changes and what the activity is on the market. So let's try to draw something. This didn't realize. This will remain the same basically, but for now. So two scenarios, one in which we do one less low retest, something like this basically. And it would be this. Then we gap up again, probably intraday here for the low retest. Can go even lower, like just poke below 555 briefly. We recover, we do another V in after hours like we did here, and then potentially go for the high retest, and we basically do the swings in this range until either breakdown or breakout. And the breakout will happen at month turn. Obviously, there's also the scenario in which we can go higher than this. The higher we go, the less likely we will get a bearish playout. But for example, if we do something like this, let's say go to 585, 590, when we correct at the beginning of the month, because likely we will correct, then this 575, 675 area becomes support, and we likely go higher based on that. So to actually get a breakdown, we need something like this. We need to break this uptrend here. Yeah, that's kind of it. Have a good one. Bye bye.